tariffs, trade war, economic recession. Okay, now that we got the scary stuff out of the way, let's get serious for a moment. The Toronto real estate market has not collapsed. Uncertainty might be holding some people back, but the market is showing signs of strength, most notably in price. And just because fewer homes are selling does not mean that your home is worth less money. Yes, the S&P 500, Dow Jones, NASDAQ have all seen significant drops. The real estate investment market has gone silent, but the single-family residential market continues to hold strong. Sales are down, no surprise there, but average prices up and days on market have dropped by more than 50%, showing that Toronto homebuyers are moving quickly and acting with confidence. Let's take a look at how the real estate market performed in March of 2025. The total home sales in the city of Toronto were 1,908. This was down 17% year over year, up 24% month over month, and up 38% through the first quarter of 2025. Out of the 1,900 total home sales, there were 900 sales in central Toronto. This was down 18% year over year, up 16% month over month, and up 40% through the first quarter of 2025. That's a pretty big spike through the first 3 months of the year. Central Toronto had 66% more sales than Toronto West and 93% more sales than Toronto East. Looking at the different market segments now, there were 173 detached homes sold. This was down 18% year over year, but up 49% month over month and 88% since January. Semi-detached sales were at 63, up 13% year over year, up 47% month over month, and up 66% through the first 3 months of the year. Townhomes, there were only 29 total sales, but there was very strong growth across the board here, with 12% year over year growth, 38% month over month, and a massive 142% growth through the first quarter of 2025. The condominium market saw the most number of total sales at 581. This was down 21% year over year, however, up 6% month over month and up 26% through the first quarter of 2025. It's a whole lot of positive growth that we're seeing through all these numbers. Detached sales are of course down because the most expensive segment of the market always pulls back during economic uncertainty. Luxury purchases are just not a necessity. To go from 4 bedrooms to 5 bedrooms or add another couple thousand square feet to your home, it's not something that just has to happen right now. You could probably wait 6 months or a year, maybe even 2. The condo market is down because our rental market is our condo market. When investors go silent, the condo market will show that volatility. A huge part of our condo market is made up of real estate investors, landlords, because we have a missing rental market. Developers would rather build and sell condominiums than purpose-built rental buildings. So our condo market represents both end users and investors. And right now, developers aren't doing much of either. So we're going to see a major bottleneck in about 3 to 5 years in that condo market. However, the freehold market, where we see the semi-detached and townhomes between $1 and $2 million, continues to thrive. This is the most competitive market segment where we see purchases that are more of needs versus wants, hence the double-digit year-over-year growth. And I want you to remember that every single neighborhood and market segment will perform differently. So if you have more detailed questions, leave them below in the comments or click the link in the video description to book a call with me directly to discuss your specific situation. Moving on now to something a little bit more spicy, days on market. It took 26 days on average to sell a home in the city of Toronto. In central Toronto, the average was 29 days. Now this was down 9 days year over year, down 20 days month over month, and down 34 days since January. The market is selling 24% faster than a year ago when there was zero uncertainty of a trade war between Canada and the US. For those individuals making real estate purchases, it's obvious that they're not sitting on the fence hemming and hawing. They see the opportunity to get what they want and on their terms, so they strike while the iron is hot. And now on to average price, which I'm sure you're all waiting to hear about. The City of Toronto hit 1,110,924. This was up 2% year over year, 2% month over month, and 13% since January 2025. Central Toronto came in a little bit higher at 1,169,539. This was a 0% change year over year, but up 1% month over month and up 12% since January. Central Toronto sold 7% higher than Toronto West and 15% higher than Toronto East. Hold on. I thought someone was here with the delivery, but I guess there just isn't any bad news to deliver. Let's break it down a little bit further now. The average price of a detached home sold for $2,400,804. This was up 1% year over year, down 15% month over month, but again, up 1% since January. Semi-detached averaged $1,644,947. This was up 2.5% year over year, up 10% month over month, and up 19% since January. Townhomes hit 1,528,890, down 1.5% year over year, up 7% month over month, and up 4% since January. The average condominium price was $758,119. This was down 3.5% year over year, down 2% month over month, but up 2% since January. So the condo market has still gained price as we've moved through the year. We now have 2 full months of market statistics while experiencing uncertainty from trade war and US tariffs, yet the value of residential real estate continues to hold steady. Overall, the average price is up year over year, and it has accelerated across all market segments through the first quarter of 2025. I'm starting to feel like a broken record here. I noticed a couple interesting facts about active inventory, which I'll explain in a second. In the month of March, the City of Toronto had 9,122 properties available for sale. This was up 63% year over year and 17% month over month. Central Toronto had much fewer at 5,336 properties available, which was 53% up year over year and up 14% month over month. The breakdown of the active inventory was actually the same as last month, with freehold being 21% and condominium being 79% of the market. There were 853 detached homes for sale, which equals 4.9 months of inventory. Semi-detached, there were 154, and this represented a tiny 2.4 months of inventory. That's a very tight market. There were 97 townhomes available for sale, and this was also a tight market at 3.3 months of inventory. The condominium market obviously had the most amount of inventory at 3,947 properties available. This represented 6.7 months of inventory, which was up a little bit from February, but actually on par with January. 2 of our 4 market segments, the semis and the townhomes, are squarely in a seller's market. Detached is less than a month into a balanced market but favoring sellers, and condominium is only 0.7 months into a buyer's market. This is hardly bad news and actually shows signs of being a pretty healthy market. Not a red-hot market that is ridiculously insane and out of control, but a more balanced market for all involved. What does this mean as we move forward? Last week, Canada was exempted from the most recent US reciprocal tariffs, and the Bank of Canada just held their overnight interest rate, signaling this is a good place to sit for the time being. Also, the federal government has called a snap election to take place in 2 weeks, which will certainly stimulate the economy with all the promises that are going to be made. The housing sector is always a hot topic during an election, so expect politicians to shoot for the stars, even if they only hope to land on the moon. So here's to hoping the spring real estate market will go out like a lion.